What's going on, guys? Get started just a sec. Let's take a look at something real quick. Um, I actually didn't see. Let's see if we actually have any economic data this week. Oh, all right. So we have retail sales coming up midweek on Wednesday for retail sales. Okay. All right. What's going on, guys? Quite a bit joined in real quick. What's going on, Renee? Welcome in, guys. I know it's been a rough start to the week. I don't think last week ended up any much better. I just hope that you guys are pretty much trying to stay above water right now. So I got told the 10-year yield was rising pretty good today. Not a good sign. Randy, you are absolutely correct. Lobo, what's going on? Hola. Today was definitely not a good day. Today the market actually officially entered bear market territory. That was pretty much kind of like the headline across what Bloomberg you want to say, CNBC. That was literally just a headline across the board, and it's just going to continue to get progressively worse. There's no sign that says that we have a meaningful reversal just yet. That's going to end up happening. While I was pretty much just starting the stream, I was kind of just taking a look, taking a glance at economic data. Just things to keep in your mind is that we do have retail sales data coming up on Wednesday. Thursday, of course, we have the jobless claims as normal. But other than that, I didn't see anything else that could kind of startle the market or kind of give us any meaningful reversal. Actually, on Wednesday, we actually had the FOMC statement. That's actually going to be the kicker. So that's what I just noticed. So Wednesday is going to be our most important day. It does seem to me that we will likely continue to pretty much thread towards the lows here. If not, at some point, maybe chop tomorrow, maybe see a gap down, chop tomorrow, and then wait to see what the FOMC statement is going to be on Wednesday. And that'll be something that maybe we'll see if the market's priced in enough of what it needs to right now for maybe a temporary bounce. Maybe we get somewhat of a relief on Thursday before I do think that we ultimately close the week on a low note into lower lows, basically. All right. But where do we particularly go from here? There's a lot of scenarios, a lot of gaps to pretty much continue to be filled. In terms of just looking at SPY right now, I continue to pretty much watch us on next support that I likely have us hitting here roughly overnight. We may even overshoot below this level. Is this 372 half? Below 372 half, then I have us coming down to 367. So those are the two levels I'm immediately watching. I think 367 is a reality tomorrow. I think that's pretty much more so. I want to say it's very possible tomorrow, based upon what we're looking at. Now, if we end up particularly bouncing, we get any kind of meaningful bounce. The immediate level that stands out to me is retesting this anchored VWAP that we have from the COVID lows, as you see that I pretty much have it anchored to, and that level is at 384. So that's the level that I think at whatever point we end up getting this relief, this sympathy bounce, you want to say, maybe we get 1 day of relief. That's the level that I'm pretty much looking at overall. Of course, you have these little minor levels that you have to reclaim. We have to reclaim 378 half, need to reclaim 382, and then above that, then you get up towards that 384 half. So those are pretty much your intermediate levels until you ultimately get to that 384 half, which I think you should end up testing to get to that anchor VWAP from the COVID lows, and then that'll likely be another rejection spot in which we create basically a higher low off of this entire decline that we've had these past few months. All right. So that's pretty much the flip side, up and down. Other than that, we kind of see the names that's literally just leading this downfall. You're looking at pretty much the primary names in the queues. And what also stood out to me is how much Boeing actually fell today as well. So you look at Tesla, you look at Microsoft, you look at Apple. I think those are probably the three biggest names that you're looking at. You could probably throw in Google as well just because of how much it was down. But likely throw a dart at anything and you ended up making money on puts here, right? You waited for that little intraday bounce, and I'm likely sure that Avery ended up saying that it was going to be a short-lived bounce, and that was just a nosedive right into the end of the day. Wiley, what's going on? DK, SPY may fall more just on FOMC and quad witching. Well, I would expect it to fall going into FOMC. That's why I say FOMC may end up being a catalyst, in which we've seen a lot of times where FOMC has been the first reaction, is typically the wrong reaction. That may kind of be like a catapult for a relief day in particular. I won't say a short term, multi day relief, But FOMC statement may end up being pretty much a relief day in which at this point right now, I think the broader market, analysts, everyone across the board is pretty much expecting a 75 basis point rate hike based upon the inflation data that came out last week. So that's pretty much what I would expect. Either Wednesday or Thursday, I think it's going to be one of those 2 days where you get that relief day. But outside of Wednesday or Thursday, I do continue to expect more blood on the horizon. So right now, those of you that are pretty much not as experienced in scalping these kind of positions, obviously we know with the VIX elevated, premiums are much higher. It is much harder to pretty much get a good percentage of gains on SPY, especially. So be cautious about that. Don't try to dump too much money, especially at these points in time. Those of you that are pretty much trying to go long, especially your long-term portfolios, 401ks, your IRA accounts, those of you that are pretty much looking to say, at what point should I end up buying in? This is where you start to scale in here, right? Would I rather wait until FOMC statement? That's a possibility. I want to say maybe end up being tomorrow more so. You wait for another gap down, maybe another 10 to 15 points down. And I think that's more ideally the point where you start to look at those names that you feel more fond of, right? You can start looking at your semis, your Nvidia, your AMD, those names. Of course, you can start pointing towards Apple, your Facebook, Microsoft, those heavyweights. Tesla, in reality, I think might be one of those names where I say I want to wait a little bit longer. I think when you get Tesla in the 500 range, then I would talk about that one. I think that one's actually is the one that we're waiting to really see a bigger downfall. I think Avery also mentioned, just based on the price that Tesla is right now, we're not going to see a 100-point day down. So the most we're going to likely see is maybe about 60. I say at max will be a 70-point day down. Today we ended up having 50 points. All right. So that's when I was kind of stay to wait. But right now, as you see all this blood, those of you that are kind of staying on the sideline, you kind of feel a little bit frightened of putting your money to work. Look at those names that you want to go shopping with, kind of like your Christmas list, and just wait for another 10 to 15 point drop on SPY. And I think that's where you start to get a more meaningful and better entry scaling into a position. All right. Other than that, though, just kind of looking at hindsight, giving you the levels on SPY, I could say where a name is gonna go, levels, gaps. That's why I would say, unless you guys have tickers that you want me to look at today, any particular ticker that you're kind of on watch that you would like to know a better entry on, I can kind of give you that. If you drop it in chat, I could take a look at it in particular and give you a better idea. Kind of just two names that I was looking at in terms of what trades I made today. One was pretty much just looking at Macy's. This is one that was just knowing retail kind of took quite a bit of a hit today as well. We had a beautiful little gap down. I was watching this towards the gap fill. Obviously, you see we have two different gaps. One for May 17th that we gapped down, and another one is where we gapped up off of earnings from May 25th here. So I was watching for this one to continue its onslaught, watching this one right below this 21 mark. Once it ends up losing that 21, that's about a $2.50 drop that we're particularly looking at on Macy's. Just continuing to really see that the fact that I know retail is taking quite a bit of a hit, and then also taking advantage of the cheaper premiums on this one, giving you guys this one so that, of course, you don't end up chasing those volatile names because once you get into these oversold territories, once the market reverses, you will get shaken out. So it is kind of better for those of you, especially with smaller accounts, smaller premium in terms of pricing here. This is a beautiful one to pretty much take advantage of here tomorrow. If we end up breaking that $21 mark, I think this is one that you could safely get into with a small position size and relatively cheap. So this is one that's on the radar. I end up taking a nice scalp on that one. And then the other name that caught my attention was also looking at Neo. You see in the orange line right here, we broke this little trendline support. We gapped down right in through it. Watching a little bit of a resistance level that I was watching for. Once we ended up getting that gap down, I was watching to pretty much retest here at this 16.76 mark. And what did we do? We got pretty much within cents here. I want to say within 10 cents. And then we ended up starting to break down. So ultimately, I do have this coming down to 14 and a half. And then that's why you see why I have the zone. So I'm going to watch for this one in continuation, watching for this one to pretty much escalate below this 1570 mark. And we should continue to see this one continue to decline. So this is another one in terms of cheap premium, ideal for those small accounts, and that'll be another one that I have on the watch tomorrow. All right. But other than that, the bigger names, the more volatile names, I want to see how the broader market acts. Do we maybe open up flat tomorrow, in which case get a better idea? Or do we get a drastic move like we ended up getting overnight? Because I'm sure a lot of you that are looking at names from Friday night, you did not expect that kind of drastic movement overnight, waking up to a lot of names that were down. What a name like Apple was down $3.50 right off the bat, right? So it's kind of hard to assess a lot of those unless there's meaningful gaps and you're looking at larger time frames. It is a bit more difficult. So maybe if I look at a name like Apple right now, taking off whatever's on the screen right now, name like Apple, just looking at where I would say ideally where was our breakout point. I would say that ideally, yeah, my level that I'm pretty much keeping on watch here is just under this 125 mark, in which that's where we ended up breaking out from June 21st. You had this nice little wedge action, a beautiful little trendline support that we ended up breaking out of a nice wedge action. This is the level that I would pretty much continue to keep watching here, right? So major key levels is what I would be watching for. That's why I would say it's for those of you that are pretty much in long-term positions, that you're looking for long-term positions. This is what you're looking for in terms of those marquee levels right now. 124 would be the level. 124 to 124 half is what I'm looking at if I'm trying to scale into a long-term position on Apple. So other than that is that let's say we get any kind of gap up, any kind of bounce tomorrow, this is where you're going to be looking to pretty much take advantage of shorting potential bounce yet again. And then for the long-term position, you're looking for an ideal entry around that my marquee level, that 124, 124 half. All right. So that's pretty much how I kind of scale that. Other than that is that I'll wait for the morning, see if we get the gap up or we get a gap down, and then you play out for that in terms of which formation we got. Like today, we ended up getting a breakdown. You saw a little bit of a nice little bounce in the morning. And what did we do? We broke below our opening range and everything flushed out before we got an intraday bounce. All right. So that's pretty much the best way I could say that right now. But unless most of you have something to look at, I don't think there's anything meaningful that I'm gonna say look at this level, look at that level right now, just because of a drastic move that can happen overnight. And to be honest with you, it's not gonna be too ideal of me giving you, a smaller time frame level to watch. But unless you're looking at, a key name that you're looking at to scale in long term, I think that's ideally what is best looking at, overnight after hours. But other than that, again, I expect more blood tomorrow. Let's see what FOMC statement has to say on Wednesday. If that gives us our sympathy bounce at the immediate reaction, and then gives the market time to digest, and then say, you know what, we need to price more of this in, we need to go lower, in which I ultimately expect by the end of the week, we do end up making lower lows, and we end up reaching my target that I do have noted for SPY. All right. So that's pretty much most of what I wanted to say. Not too much is on my watch list right now. As you see, everything is just moving together. It's not that anything is looking better than anything else right now. I can't say that, one name is looking better, one semi is looking better than the other right now. Everything is dropped today all together. Every name in every sector today literally ended up closing. I think today was actually the first day since like 1990 something that every name in the S&P 500 actually closed red today. So that's something else to keep in mind right now. It just tells you that the broader market as a whole, everything is moving collectively together to the downside. So that's why I say there's not a name that's looking better than another, because if the market ends up gapping down tonight, everything is going to move with it. All right. So that's the pretty much a key statement. Hopefully you guys kind of get that uh, statement of what I'm trying to say is that we end up gapping down tomorrow. Everything is going to go with it. I don't expect to really see anything kind of hold up for the most part. Pansel sell off. Yeah, Randy, it is a painful sell off. That's why I say, it's kind of hard to say which names I really like more than others. Right now, it's just kind of keeping a tab on those names that you really like the most right now, and just making a note of them for when the time comes right. Those are the names that you want to pick up and you want to go long on, whether it be option shares or leaps for that matter. All right. Renee, I wanted to buy Didi and hold for a year or so, but I can't put up their charts. I'll take a look at it for you. That's ideal. Pretty much looking at names. I'm assuming you're looking at that long term. This actually might be pretty much a beautiful one here. First thing is ideally you're looking at a gap. You have a beautiful little gap fill here sitting right now. that you would expect to pretty much get filled here. We've actually bounced off that that we defended that gap fill here back in August of last year, and we're pretty much bounced right off of it from May 23rd. So ideally, I would love to see this gap pretty much break down. And why do I end up? I did end up pulling the wrong chart. I'm a dummy. So wait, I want to make sure you're looking at DD. This is a penny stock then. Is that correct, Renee? I just want to make sure that that's exactly the name you were looking at. I haven't looked at DD at all. Why can't I pull up that name? That's kind of odd. Let me see 1 second. Let me see. Yeah. All right. So it is this one. Um, it's a penny stock. I mean, if you're trying to buy a penny stock right now, I say throw a dart at it. But if you're really trying to wait, I would particularly wait, Renee, on that. I would wait to get to a closer bottom. That kind of coincides with my statement right now. I would wait for the market to kind of give you another 10 to 15 point drop on the SPY, and then try to maybe look at a name like that. I don't think there's anything that I would really say that I want to go out there and just pick up a dart like that. So I would wait on it if that's the case. And you can't put it up either. So okay, then that makes sense. So there's nothing I can really do much about that one, Renee. If it comes back up, like again, the best thing I could say, it got delisted. All right, then that explains it. That explains a lot. So it got delisted. So there's nothing to look at there. Why wouldn't anything invest in right now? Scalp. That's why, Randy, you are 100% correct. There's no reason to pretty much invest in anything right now. I think ideally, though, this is where a lot of those millionaires, billionaires are pretty much found right now. Name people like Buffett, like these people, they look at names that they want to pretty much buy into. They make a note of these names. They make a note of key levels that they want to particularly get in. But they know at these levels, this is where pretty much they end up buying and on these kind of market crashes, and they buy for years out. So these are names, or that's why I say, make your list right now. That's literally the biggest thing. Make the list of the names that you like. I think probably one of the most popular names will likely be AMD, right? Those are probably one of the most popular names that you want to end up looking at. Wait for AMD to come in a little bit more. Wait for another 15 point at least drop on the SPY, and that's a name that you want to look to start scaling in for the long term. So that kind of coincides exactly with what Randy's saying. In terms of scalping though, this is where if you're not an experienced trader, you don't really get in terms of knowing how to utilize your opening range, utilizing VWAP, utilizing your EMAs. This is where I say try to stay cash until you find a meaningful reversal, or you find names that you want to buy into long term. That's pretty much the best sentiment that I can kind of give you right now. I know it's painful. I know this is not a market that anyone wants to be in. I literally took two trades today and that was it. And this is one of the biggest times where you do not want to find yourself over trading, because you will literally get yourself pretty much chopped up. And I think, if you're trying to throw a dart at anything, you're likely end up throwing a dart at a put than you are at a call trying to catch a reversal to back to the upside, because this market is not favoring anything to the upside right now, right? So what's the biggest thing that I know traders usually say, especially experienced traders? They usually say follow the trend, right? Don't play against the trend. So you're playing if you're trying to pretty much catch a knife, buying for a call when the entire broader market is coming down, ask yourself why is the biggest question. All right. So kind of hopefully kind of helps you with the mental side of everything. That's pretty much what I was trying to do today, is just help you with the mental aspect. And then of course with the broader market all just coming down collectively, it is much tougher to say, individuals names stand out right now and that you want to pretty much key in on. All right. John, you saying Pfizer, I'll take a look at it. Let's see off of first let's actually take a look at the weekly. See what our weekly chart on this one looks like. So I remember actually looking at this when you had this nice head and shoulders action, which pretty much invalidated. Now you are looking at pretty much breaking down off of this trendline support. That's ideally what ended up happening up today. You broke down off of that trendline support right now. So that head and shoulders is technically playing out right now. Now, what level do I end up seeing this ultimately coming down to? Now, there are no gaps in particular. That's kind of one thing that just stood out to me. The other factor is that the level that I would be looking at for this to come down to would be right around this range. This is the range that I would be looking at. Between 43 to 42 here would be the range. That was actually the peak that you had from December of 2020. And that was also the retest of this trendline support and your breakout point that created new highs back from November of last year. So I would wait for this one to come in a little bit more. You have potentially about another $5 drop on this one to come back in, John. And I would look to pretty much see if we end up having a meaningful reversal at this 42 to $43 range. And of course, you do want to pay attention to the broader market in that aspect as well. But this is one of those statements where I say, you're looking at that marquee level. That 42 to $43 would be that marquee level that I'll be watching for this one to pretty much continue to come in after just breaking this trend line support. All right. So you likely get a little bit more of a meaningful move. Probably see another drop down to 46, low 46. If the market allows it, then we get a meaningful bounce. You get a retest of the trendline support as a resistance that you broke out of, and then you get the flush right back down to that 42, 43 mark. And that'll be where I say you look to see if you potentially go long, whether it be shares, shares, leaps, or even calls for a short-term bounce. All right. But that's one I do like. I am very fond of Pfizer. I think this is actually one, especially that's really good for a long-term hold, because I know that this one's actually very, the Pfizer and their entire collective use of drugs plus their dividends that they have. This is one that you do want to have in a long-term portfolio, and I actually do love this one. This is one that's kind of on my watch list as well at some point. So I do like this one, 42 to 43. That's the level that you would just want to make a note of and write down for reference. All right. So that's a beautiful one. One that I was actually going to take a look at was AMD. I think that's probably one of the most popular ones. I think amongst everyone right now. So it might be worth actually taking a look at that one right now. Level that I remember that I was watching for was right around the $74 range, is what I was watching. So 74 half is that range that I'm watching. This is where you ended up having a lot of that chop, a lot of a consolidation, I should say as a better term, before you ended up retesting that base once more at that 74 half and launching to make an all-time high. So 74 half is the level that I'm watching on this one. You're sitting at 86, 87. So roughly about a what, another 12, 13 point move to the downside. And again, this is where I say make a note of those key names, make a note of the level. AMD, once we end up getting close to that 74 half, this is where you want to go long, calls, leaps, shares. That's where you particularly want to get a beautiful entry point and get a starter on that one. So, and when I say starter, obviously 74.52 is that marquee level that I want to go long on. You get a starter at that position. That way, in the event that it ends up breaking down, you allow yourself to pretty much average down for whatever reason. Maybe we end up breaking below that 74 level. Now you see, look, there's another breakout level that we had from July of 2020. What is that breakout level? It's pretty much sitting right at this 58 low, right? So that's why I say scale in. You get a starter position. You would expect it to hold this major support that you had through all of that prior consolidation before you made that leg up to the all-time highs. You want to see it hold that 74 half. If it doesn't, that now it allows you to pretty much average down on your position for that long-term hold, and you could pretty much get in at this 58 low. All right. Since below 90, now we are talking. AMD was bound for it. I think everyone kind of felt like this one was coming at some point, but I don't think anyone was expecting it to break that 100 level. I think that's what a lot of traders actually had a hard time of letting go, but it was bound to happen. I think those of you that knew that, SPY was ultimately still too high in all relevancy, you knew that AMD was going to break down below that 100 mark. And this is where we're likely looking at, this is why you're looking at those levels of prior consolidation that we had for multiple months, for maybe past years of looking all the way back towards 2020. All right, as most of these names are basically just wiping out everything that happened between 2020 up until now. We are wiping out all the gains that we've had. That's ultimately what we're looking at right now across the board. All right. Sids, I will sell cash secured puts to get my price plus premium. That is actually very smart of you, Sids. That's something that you have to be very disciplined, but a very smart move on your part. DK, I'm thinking similar to AMD. The other tech value stocks like Apple, Microsoft are going to be good buys. Apple and Microsoft are going to be very good buys. The only thing right now that you do have to take in consideration with a name like Apple and Microsoft, and I want to throw Tesla in there as well, is that those three names are actually leading this downside right now. As much as everything's going down collectively and everything is just moving, in the same direction, we're not seeing anything that's relatively staying green for that matter in the queues. Those three are literally leading the downfall here, and I expect quite more damage out of those three names. So those are three that you do want to keep on the shopping list, but just keep in mind a wrong entry on that one will be likely costly as well. All right. So, kind of keeping it simple. I kind of hope that I end up helping everyone from the mental aspect. Those of you that feel a little bit nervous, you feel pretty much unsafe entering your funds into this market. Stay cash, stay calm. Just wait for the hurricane to basically play it out, and then you'll likely see a lot of the traders pretty much in chat for the most part. I know that Avery's done a lot, pretty much leading you guys on voice, telling you the downside. He's dropped I don't know how many charts on his Twitter as well. So if anything, follow him on his Twitter. I know he's dropped a lot of charts, a lot of names, and which targets he has projected on larger time frames. So that's pretty much hopefully been helpful for you all as well. I know that Tom, I believe, is still out on vacation right now, so he should be back soon. I'm kind of doing some back end work to hopefully get some, I know, fun tools back on board for the TFC crew. And then hopefully I should be back on live soon, but kind of doing some back end work. That's why I haven't been on live too much the past few days. But other than that, stay safe, guys. I'll kind of keep it there. Hopefully short right now. Let's see if the market gives us another gap down ahead leading into FOMC. And if we get any kind of relief day at some point this week, which I would still would anticipate is going to be either Wednesday or Thursday. All right. But ultimately, I'm still leaning to the fact that we end up making lower lows by the end of the week here. All right. So I'll kind of leave it right there. But appreciate you guys joining.